Hey, good morning, everybody. Give me a second here. I'm trying to rearrange some charts, maybe a better view for those on social media. And I'll work on this for tomorrow, make it a little bit better. All right. Checking the options here this morning. The downside, surprisingly, almost got hit. A little bit of a crazy day with the news. 9:30. Good morning. Good morning. Okay. Well, we'll see what this looks like. Some of that stuff that is on the screen in the morning really is unnecessary. I mean, it's for me to work it a little bit easier, but as far as you viewing it, not great additional information. And maybe just looking at the charts looks better. Okay. Well, we'll get this better by tomorrow. All right. Let me see where I put other stuff. Go through our routine, where the markets are. All right. So we've been talking about this extension, the gaps, the slowing momentum. And look, at some point, things pull back, and you can see they're pulling back now. And it was surprising last night. I don't know if anybody looked at what was going on last night, but I guess that's just trading and people, you know, support resistance. But after the sell-off yesterday, and it was, I mean, the markets were pretty resilient in the face of the sell-off and coming back. And I mean, when prices are in an uptrend and the strength like that, usually, buyers don't give it up easy and they go down kicking and screaming. Whereas on the downside, lows tend to happen a little quicker. So anyway, this morning and overnight, they were back up to the highs. And you can see right here, they were right back up to the high and pushing up above the highs. And I was surprised to see that. So now, where do we go from here? Of course. So we've got a pretty good high in place with these retests, and it's really whippy. I mean, the size of these bars are big. Um, and so the white area is what happened during the trading day, and the bluish gray area is overnight, lower volume. And so there's an unfilled gap down here. And let's see where that puts it. If we do this and put it on all the charts. I don't think it'll go down there today. I would be surprised. That's a long way down from the high point. And I'm just looking at the futures, and that's overnight trading. So there's a little bit of support there. There really isn't much. There's yesterday's low. So as that goes down there, most times it'll violate the low, greater than 100% retracement. That's what I would expect looking at this chart. And so this was the initial move down last night, the rattle. The next move down, smaller bar, tried to hold on the overnight low, and now it's moving lower toward this low. And that's where the buyers are going to be. And most times it break down below it, and then we start the counter trend move. That unfilled gap, if this closes like this with a big topping tail bar and maybe a little lower, I mean, that would be a reasonable expectation to think that that gap gets filled. Now we'll see in a day or so. We'll see what happens today. Right, so NQs, we always look to see, is there agreement between these markets? This has been resilient. It's all about the semiconductors and AI. And they held up unbelievably well. There's that overnight low, yesterday's low, which is coming down to, same story. And here's what I saw last night. It was like, man, this is amazing, with the not Goldman. Google was up, and it was up big, but so many of the others were getting smashed. Like, man, right back up to the highs. It was like, this is crazy. And so now this is a little bit more the reality. And of course, we're going to want to see what this looks like by the day's end. And as we look at the Qs and the spiders, so you got 26,000, big number there. It is the futures contract. More meaningful are the underlyings, not the futures. This is relevant to those trading futures. Pay attention to that. But as far as the rest of the world goes, it's really the underlying, where there's support and resistance and subjective things like moving averages and so on. So coming down to the overnight low, reasonable expectation that it's going to get down there. And then from there, how aggressive do buyers want to be? Can they drive it back up? And that's trading day by day. Support, resistance, trends, and being extended like this. In last night's video, we went over extension from the 50 MA historically. I mean, this was like the Qs were like 7% from the 50 MA historically. That's extended. And it's one of the reasons why we say overbought. It's a useless word, just useless. And the indicators, they're useless. Extended historically over decades gives you an objective measurement. And then you need to see the price action actually confirm. And that's what we're seeing for the moment. We'll see where this ends the day. We look to the left. There's the prior low there. We'll see how aggressive buyers want to show up or not, or whether it's coming down. And this is overnight. So there's a pivot down there. 26,000 and these overlapping bars, but this is overnight trading there. So they're, we'll look at the Qs. Well, you've got this low right there. So, as I look at this and try and compare the overnight trading with the trading that happens during the day and see how things line up, which increases the probability of a certain reference point. So let's look at the Qs here. And so this was 11 o'clock. Qs. Okay. All right. So as it comes down to this low, and we got this little shelf. So, and that's a reasonable area, give or take. This is overnight trading. There isn't a lot here because it was so strong, but it's going to gap down. You can see where my cursor is on the daily time frame. That's a sizable gap. And so, of course, we'll be looking at the 5-minute chart, the 2-minute chart, a little bit more detail first thing in the morning, to see how it begins to bottom out there, some kind of a bounce. But as it going sideways now and starts to build an area of resistance, we begin to see. So let's back on that. If we see where we're going to see this third day tomorrow, and let's assume it just stays within this range. Now from there, breaking some support becomes a lot more meaningful than just violating one day. Whereas you have 2-3 days going sideways, your intraday charts start to build rounding tops, square tops. You get to see topping tail bars that are breakout failures and so on, and it starts to build a more bearish picture and being extended, unfilled gaps, and it could get nasty. And there's some nasty stuff going on out there besides the individual stocks. So I mean, look at this, how this topped out 2 days ago. This is low, is it value or low volatility? I forget. You know, they different S&Ps. There's one value, there's one low volatility. I think it was the low volatility one I saw last night. Uh, it got crushed. Right, that's low volatility. Anyway, there's some warning signs that are obvious if you know to look at some different charts. Some nasty things happening. Look at regional banks. They got smashed yesterday. That's a bad sign. Uh, what else? Financials. And the market's held up in light of this. And is that irrational exuberance? I think maybe a little bit. Low volatility, SPLV. Thank you, Alex. SPLV. Look at that. That low volatility, you would think, oh, that's going to be safer. It was destroyed. And consumer staples, that got destroyed. So look, it's all about, as you already know, AI, semiconductors, and that was the idea of today's slide, pre-market slide. You know, this is the key to the crack. Right? You think, okay, market's on crack the way it's moving up, but look, it's not for us to, we can think whatever we want. The trend is up, it's extended, it's likely to pull back. But now we've got the semiconductors, you know, coming in. I haven't looked at NVIDIA this morning, but you know the players there, what to look for. So this is what's driving the markets and why this is up, Qs are up, and why things like low volatility is getting, you know, killed. And lots of stuff, retailing getting killed, and it's lower. So the warning signs are there. No one should be in a position that is in the green room or watching on social media and not be surprised if the market takes a more substantial move to the downside that gets ugly. Here you go. There's the warning signs. They're all over the place. All right. Other markets. Hand it over to Dan. You got the message. I think the Dow got lots of room to fall, so this could be a tradable instrument for intraday. It's underperformed, and it's got an unfilled gap. We keep an eye on that. And I think one of the more surprising things was the Russell falling apart. Yesterday, I talked about, you know, pre-market. It's like, okay, this is where it should begin, try to stabilize. And it did. It was the strongest early on. And I think, you know, I don't think I know. Once KRE fell apart and then the energy stocks fell apart, it was done for. And so big whippy toppy price action, you know, really a big mess. All right, silver's finding a bid here. Maybe toe in the water. You know, it came down real hard. I'd wait a little while to see the intradays clean up. And you know, gold, it's not ready yet. It's just not ready yet. It needs more time. Crude oil. I said, watch these energy stocks. This was a blast off move, and a lot of the energy stocks did. We need a little time to stabilize. There's a lot of patterns. They're just not good patterns out there. I guess those are the patterns. Yeah, I'm gonna look at SPX. I didn't forget, DB. So here's the spiders moving down toward yesterday's low. You can see the cursor. And I got to make that a little thicker so easier to see on both of them. I'll do that for tomorrow. And So yeah, it's gonna gap down to yesterday's low. So that it puts a void up above. It's gonna hit the support. We'll see how much it jiggles around or the lack of, and then where we go from there. So SPX, it's gapping down here, right, around 68.50-ish, going back up to the high. That would be insane. So I think the call strike should be, well, I don't even feel anything's a no-brainer in this market the way it's gone up. But with the semiconductors rolling over and financials being weak, it's unlikely it's going to go back up there. So anything above yesterday's high should be okay. And that down move put the put like way down there. So it's not going down there today. Something below 6,800, I believe, would be safe. Oh, all yours, Dan.
Well, good morning. Yeah, we didn't get a single swing yesterday, and that was for two reasons. One, that's my general kind of bias on Fed Day, and secondly, there were no good patterns. A couple day trades, and there was a ton of earnings last night. And I went, well, the last 2 days, I've been saying there's a lot of ugly charts out there, even with spiders and cubes at all-time highs, a lot of ugly charts. I went through earnings pre-market, deleted a ton already just because no patterns and time constraints. Um, and then I always just have a bias after Fed Day, wait an hour the following day until you get the true moves. I've just seen so many suck-in moves, the last hour of the Fed day that get reversed the next day. All right, alarms. We have very light inventory. Met C, today's Thursday. Tuesday had earnings. I was watching it as a gap and snap. Now I'm watching it as a primal. My alarm went off, but I see it's going back down, so I'll just reset the alarm as well. Let's go right to earnings. And I was saying in the green room last night after the three monsters reported, um, which we'll look at, I was shocked that the Qs were flat and only down a little bit. All right, rig here, a little buy setup coming in. It was up, but I like it. Let's just keep an eye on it. So Guggenheimer, that was a bullish close yesterday. I said that. I mean, my chart totally looks higher. I can almost hit 300 pre-market. So that's a gap and crap call spread. Yeah, gapping up $20. I forget what its market cap is. But that's a gap and crap call spread. Microsoft was down nasty. It was like, I think it was around 505. So now 527 is a whole lot better. Technically, it's just gap into this gap fill. So 30-minute high, that's a put spread idea. And that is the one getting its head chopped off. I guess they're finally starting to focus on, just like the internet days. All you got to do is mention internet and your stock goes up. And then whether it's a year or two later, they're like, oh, maybe we should look under the hood and see if um they're making any money or not. And so I think with Meta now, they're finally starting to say, well, is all this CapEx spending on AI a good return? So that is a nasty That's a nasty gap. But it's excessive. And I'll be watching 30-minute high or whatever setup for put spread. Oh yeah, our Starbucks right here. Yeah, this was the only earnings trade we did yesterday. We did a condor, just $2 wide, took in 55 cents. We did the 93s. Look at my horizontal line. It's above the 200. And what's the low strike? Oh, you have it right there. It's 77. I mean, that's what a condor is. And look, 77 is below this. And so we're making the technical speculation, even with earnings, that whatever the gap is, it ain't going beyond those two numbers, and we keep the money. And so whenever you sell options into earnings, your goal is don't move a lot. Of course you're going to move because it's earnings, but just don't move a lot. And this could not be more perfect. 83.40, gapping down 80 cents, big friggin' deal. We're going to be at 98% of max profit. So, I'll be looking to close it at 2 pennies or whatever, just to be done with it. CMG. I mean, look, I said yesterday, this poor thing still is in trouble. It's trying to bottom here on the daily. Look at the weekly. It's kind of a bear flag. It'd be a textbook bear flag if you didn't have this little bounce. If it was just fluid all the way down, that's a bear flag consolidation. Monthly's on a downtrend. So that thing is in pain. That's a monster gap down. $40 to 32. So I got it in the window on the other computer. I'll be watching it to see what it does in the first hour. But my bias is 1 DTE put spread. Now that's CDE. I had an alarm up here at 1840 because it's a mining stock. It's making the turn, but now it's down. eBay getting whacked. That's a big percent. I'm going to put that in a window. And yesterday there was a whole lot of stocks got whacked, and today there's more. I mean, this one's not gapping under support, but just percentage wise, gapping down $11. But then this is actually a better 1 DTE if it takes out the prior high, because it's not in the middle of no man's land. At least it's on support, but you got to wait for a setup. These casino stocks have been under pressure. MGM, Caesar's Palace. My buddy Bat21, a pilot who flies to Vegas, he told me yesterday there's a lot of changes going on. That the casinos he said there's no more, parking is $75. There's no more $5 steak dinner. There's, drinks are $30. They're trying to get rid of the riffraff, he said, which is, but he said a lot less people there. And, these two stocks confirm it. And slowing economy, if you can't buy food, do you really want to go out there and gamble your bread money away? I don't think so. All right, AGI, I thought it was making a turn like that other one, but now it's gapping down. So this might put some pressure on GDX. Well, it was up, so now it's flat. Carvana. I was contemplating, you could have sold the 240 puts yesterday. I forget what it was, 80 cents or something or other. So I was tempted to do a short. I got strangled. the 240 puts and I don't know, the 450s. But I didn't, it's something can move. A lot of, well, I don't think this is a REIT, but this picture reminds me of a REIT. There's so many REITs that look like this. They're just tanking into earnings. This, I said, if it opened flat, would be a great 1, 2, 3, but now it's gapping down. Now it's a bearish gap. But that's a beautiful wide range closing breakout. But now the gap's messing it up. Golf Hotel. That would have been a nice 1, 2, 3. But gapping, wow, that's a big up gap. So that is not a gap and crap pattern because that's a bullish gap. But it might be in the category of excessive where we can do a 1 BTE or call spread. But I like Google better because see a gap and crapper is it's already been moving and it's far from the 20. Look, that's already $10 off the pre-market high. The gap and craps, you want the bigger the gap, the better. Because then the rubber band gets stretched more. All right, hey, I'm trying to make a turn. Here's another one that's getting his head chopped off. We've been talking about these fancy grocery stores, Sprouts, Whole Foods, whatever the other one is, being, killed lately, which is another sign of a consumer, having to buy discount food, not fancy food. That is a nasty 25% gap down. Crazy. So I'll be watching that for a good spread. Wolf recent IPO gap from 25, nothing to do. All right, less than a minute. Form was a beautiful closing breakout. Would have been a 1, 2, 3, but yep, up too much. FMC getting his head taken off. Look at these gaps. This thing's already down from $41. Gotta put that in a window. Let's see. Let's see, that's not a gap, it's not pattern. It's just is it a possible excessive gap? I don't know. I'll just watch it. NOW, nothing. ESRT. That's actually a buy setup in the middle. It's actually a condor pattern. If you could sell the 8s and the 7s. CGNX, that's nasty. Doc, yeah, we only have one open trade and wow, that's an igniting gap. Man, that's a shipper. A shipper. That's a monster gap in shippers. Yeah, we only have one open trade, BAC long calls. And it's holding fine. All right, look at Guggenheimer here. Yeah, I wish it opened at 300. Bigger the better. Amazon's after the bell, but it's selling off here. A Meta. That's a nasty gap. So for 0 DTEs, I love when they get down and continue to sell off for 30 to 60 minutes because then it allows that the rubber band is getting extended 15 and we get to get farther away on our short put if and when we do it. But man, that's a pain right there. No, Apple's the best thing. Look at this thing ripping. Earnings after the bell. That's rallying into earnings. That's another bullish pattern. So look, so a REIT here, apartment REIT, just so many of them got killed. 30-minute high would be a 1 DTE, or if there's any, I haven't looked. But I know a lot of these REITs don't have weeklies, but I'm not gonna waste my time to do it right now. All right, MPC oil. Let's wait 5-minute high on oil. I don't, with the market falling. But I like MPC and I like Valo. Are two good oils. Our XLY had a gap down. We bought a small lot of this in the ETF letter. Let's see, that's an old alarm. All right, continuing with earnings trades here. Yeah, that one's 30-minute high. Other than that, this is a friggin' bullish uptrend, all-time highs on Clack. Too far from the 20 for me, but that's bullish as can be. Another REIT, Avalon. So I think these REITs, a lot of them might be ready for a bounce. They're down so much. PSA is a storage REIT. What's that? Alarm 296.
Black has huge big spreads. Anybody thinking about trading that?
Who?
Black.
Oh, Clack. Yeah, it's too. But yeah, not for me. There's a nice bull rectangle, CVI. Bullish weekly. Little buy setup. A lot of little buy setups like this after a big explosive move are buy setups and bull rectangles. So that one looks pretty good. That looks great, actually. CVI, I'll put that in the window. However, Starbucks, let me see how we can manage this. Wow, what you cannot get any more perfect on a condor. You just want them to open flat. All right, so let's see, the midpoint to close them all, 9 cents. And they expire tomorrow. Wow, I thought it would have been a lot less actually. All right, I'll just wait a little more. I'm not paying 9 cents.
Look at it. I never looked at IBM options in the past. That thing is huge spreads.
So look at some of these disasters. FMC, SFM, eBay. I was watching FI from yesterday. Oh, look at that 15-minute chart. Looks horrible. That looks like a day trade short. It looks horrible. I would never short it being so far from the 20 like that, but look at the 15. All right, continuing. ESS, big old mess. Maybe there's an igniting gap. Wow. I was hoping for a pullback on that because I like the weekly monthly. Look at that bottom on the monthly. That monthly has room to $20. But I'm not chasing here. Wow, that's nice. Here's another